Hey everyone, welcome back to Corporate Decoder. Today, Plum Acquisition Corp. the third just filed an 8-K announcing a big change with their auditor, and there is a warning sign about their internal controls that we need to discuss. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about who is checking the company's financial books, and it reveals a potential issue with how they manage their money internally. So Plum Acquisition Corp. the third, or PLMUF as it trades, has a new auditor. For a while now, their accounting firm was Marcum LLP, but on the 3rd of June 2026, Marcum stepped down. This wasn't just a simple switch. It happened because CBCPA's PC actually bought the part of Marcum that does this kind of auditing work, a deal that went down back in November 2024. Now, when an auditor leaves, especially in this kind of situation, regulators want to know if there were any big disagreements. The filing here states there were no major arguments about accounting rules or how they presented their financial picture. That is generally a good sign, meaning it wasn't a fallout over bad accounting. However, and this is where you need to pay attention, the report does mention a material weakness in the company's internal control over financial reporting. Think of internal controls as the company's own rulebook and checks and balances for how they handle their money and financial reporting. A material weakness means there is a significant problem, a serious flaw, in that system. This was previously disclosed in their 2025 annual report and their first quarter 2026 report. This isn't new information, but the auditor change happening right after highlights its continued relevance. The good news here is that Marcum's past reports on Plum Acquisition Corp., the third's finances for 2025 and 2024 did not have any major red flags like an adverse opinion, meaning they didn't say the financials were wrong, or a disclaimer of opinion, which means they couldn't give a full opinion. Their reports were also not qualified or modified in any way that suggested problems with the audit itself or the accounting principles used. So, while there is a weakness in their internal controls, the past audits themselves were clean in terms of opinion. The company also got a letter from Marcum LLP, dated the 14th of August 2026. This letter is essentially Marcum agreeing with what Plum Acquisition Corp. The third is saying in this filing about their resignation. It is filed as an exhibit, which is like an appendix to the report, and it gives us another layer of confirmation. The report is signed off by Kanishka Roy, who is the President and Chief Executive Officer. This indicates the company is officially acknowledging this change and reporting it to the CC. So, what is the big picture here? Plum Acquisition Corp. The third is changing auditors, and while there is no indication of accounting disputes, there is a persistent internal control weakness. This isn't a new problem, but it is something new auditors will be looking at very closely. For investors, a material weakness means there is a higher chance of errors in financial reporting, which can lead to bad decisions and potentially surprise negative events. We've seen companies with similar control issues struggle to regain investor confidence, much like what happened with Bed Bath & Beyond or Rite Aid as they navigated significant operational challenges. The key will be whether the new auditor's CBCPA's PC can work with the company to fix these internal control issues effectively. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this helpful, please like, comment, subscribe, and join our Discord.